On Friday the 28th of August, 2026, crypto custody giant BitGo has just closed a deal that reshapes institutional crypto. It is buying Nydig's institutional trading arm for $42.5 million in cash and stock, with an earnout of up to $15 million tied to revenue milestones. That means the total could reach $57.5 million, and the transaction officially completed yesterday on the 27th. This is not a rumor or a letter of intent. The assets, staff and clients have started moving. The timing is crucial. Bitcoin briefly pushed above $80,000 in the week before the announcement, a climb of more than 20%. When prices recover, infrastructure tends to consolidate, and BitGo is making its move now. The biggest change in the past 7 days is that the deal closed and the financial terms became public. Before the 8K filing on the 27th, the price was largely undisclosed. Now we know the structure: $7 million in cash at closing, roughly $35.5 million in BitGo common stock, a $10 million cash payment at the first revenue milestone, and up to $5 million more in cash plus additional shares at a second milestone. Nydig is not simply selling a side desk. It is refocusing on power generation, Bitcoin mining, and high-performance computing data centers, with a development pipeline above 3 gigawatts. This follows a clear build-up. Caledon went live on BitGo's Go network on the 25th, BitGo Korea secured VASP registration on the 19th, and Derive advanced on-chain derivatives on the 4th. Practically, roughly 30 Nydig employees are transferring to BitGo, along with an estimated 250 institutional client relationships. Those clients now gain access to BitGo's custody, settlement, and financing stack. For institutional traders, the benefit is fewer moving parts: custody, derivatives, structured products, and financing under one regulated roof. The earnout structure also aligns incentives. BitGo expects to grant about $5 million in restricted stock units and another $5 million in cash retention to transferred staff, both vesting only when the second revenue milestone is hit. So this is not a passive acquisition. It is designed to keep the people who made Nydig's desk valuable. Andrew Melville of Block Shoals points out that this cycle is driven by institutional capital rather than retail demand, which explains why incumbents are racing to service that demand. Looking ahead, the near-term question is whether the revenue milestones are realistic. If they are hit, Nydig receives the full $57.5 million package, and the transferred team unlocks retention awards. That gives both sides a reason to make integration work quickly. BitGo is now publicly listed, so the stock portion also ties Nydig's sellers to BitGo's market performance. The wider signal is consolidation. Firms that only offer custody or only offer trading may struggle against one-stop platforms. BitGo's Korean VASP registration also gives it a regulated Asian foothold, just as institutional activity expands beyond the United States. Watch integration announcements and institutional derivatives volume over the next few quarters. That will show whether this deal creates a stronger platform or merely adds headcount. Takeaway: BitGo's acquisition of Nydig's trading arm is not really about $42.5 million. It is about who controls the institutional plumbing as Bitcoin matures. The real asset here is the combination of 250 client relationships, a 30-person team with derivatives and financing expertise, and an earnout that keeps everyone focused. If the next bull cycle is indeed institutional, the winners will be platforms that can settle, lend, and trade without clients leaving the building. That is exactly what BitGo is trying to build today.